All right, let's get it. So what we're about to get into is trader essentials, okay? Trader essentials. These are things that you must know as a trader. Understand this. If you don't understand these things in front of you, then it's going to be hard for you to be successful as a trader. All right. Let me turn down the music just a little bit. I'm vibing today. I'm in my zone today. I'm in my flow today. So hold on real quick. I don't want that. Hold on. Oh, there we go. All right, cool. That's goody. That's goody. That's goody. All right. So first and foremost, guys, you need to have a trading journal. Now, if you've already saw this presentation, drop a 2 in the chat if you went out and got your trading journal. Let me pull my chat up so I can see it. Drop a 2. All right. Tasha got her trading journal. Mary Ellis got her trading journal. Yes. Destiny got her trading journal. Renita, KB. All right. Olivia. Awesome. So if you do not have a trading journal, let me tell you, you want to go get a trading journal as soon as possible. All right. In your trading journal, you need to make sure that you understand a couple things. You need to write down a couple things, okay? We're going to get into what you write in your trading journal. But these are things you need to know as a trader. Number one, you got to know, why are you trading? Trading is very emotional. Trading will make you quit. You know, if it's not working out, you will quit. So you have to understand, why is it that you got started trading in the first place? This is very important. If you don't understand this, then you're not going to be, it's not going to work out for you. All right. So you need to understand, why are you doing this? Your first page in your trading journal needs to be, why are you trading? Why are you here? Why are you spending countless hours learning this skill? That's very important. Number 2, you need to understand what type of trader you are. Are you a swing trader? Do you hold trades for weeks at a time, for months at a time? Are you an intraday trader? Do you hold trades for days at a time? Do you take all day, a day or two to get in profit? Are you okay with that? Number 3, are you a scalper? So when you're looking, a scalper is someone who likes to get in and out with the bag. A scalper is really a binary options trader, because you're literally getting your money 1, 2, 3, 4, 5 minutes. Like, you're trading on the 15-minute chart, the 5-minute chart, maybe even in the 1-minute chart, okay? So you need to understand, what type of trader are you? If you're a swing trader, then you are trading you're using the day chart, you're using the 4-hour, and you're using the day chart, and then you're using the 4-hour for your entries. If you're a swing trader, if you're an intraday trader, you might be marking up the daily 4-hour, but then you're using like your 1 hour to get into your trades, your 4-hour or your 1 hour to get into your trades. If you're a scalper, then you might mark up your 4-hour, 1 hour, 15-minute, but you're probably using your 15-minute to get into trades, your 5-minute to get into trades, your 1 minute to get into trades. So it's very important to understand what type of trader you are, because when you're taking trades, if you don't understand what type of trader you are, you don't understand the trades that the person sent you, what type of trader they are, then you're going to be frustrated. Right? You're taking trades from, you're taking trades from, what's our app? Swipe Trades. You're taking trades from Swipe Trades, and it's saying that it's a swing trade on there. You might not understand. You might be in a negative for 2 days before you go positive, right? It's a different type of patience that you have to have once you understand what type of trader you are. This is very, very important. Another thing that's very important is, do you prefer technical or fundamental analysis, or do you want both? One person who is a technical and a fundamental trader is Lex Waves. What does that mean? Technical is you're looking at the charts, all right? You are looking at structure. You're looking at what the charts is telling you. You're looking at all technical. Fundamental is you're looking at the news. You're seeing what's happening in the news, and you're trading based off the news, right? Based off how the market is feeling. That's fundamental analysis, all right? You also need to have a pre-trading routine. What is your pre-trading routine? Are you working out, getting your energy up? What are you doing? Are you meditating? Are you doing your affirmations? Are you in prayer? What are you doing before you get on the chart? See, this stuff is important. You got to put yourself in a mindset and be ready to hop on the charts, because whatever energy that you have, it's going to transfer to the charts. So you need to make sure that you're in the right mindset when you hop on the charts. One thing that D'Angelo told me, he said, you know what, Ebony, he said, those mindset calls really help me, put me in a mental space that I need to be in before I get on the charts. So you need to have a pre-trading routine. Whether you're going to trade the London session, you can't just roll over and hop on the charts, because you might be tired. You might have to get up and do some jumping jacks real quick, you know, to get yourself up. You might have to run in place, but you have to have a routine that you use every single day. One routine that Christopher Terry, when I was first starting, and Christopher Terry used to teach us every Sunday before other educators start stepping in. When he was teaching us every Sunday, he used to talk about how like his routine was affirmations. So he used to get in front of the mirror and be like, I'm a gladiator. The charts speak to me. Like he was going in on his affirmations, right? In fact, I'm not sure if it's still on there. I'm gonna have to check. Let me write a little note so I have a mental note here to go check. Christopher Terry actually used to have a training video inside of the academy in the mindset part. So hold on, let me write this down. Check for Christopher Terry's video, because if you've never watched it, you gotta watch it. Check for CT's mindset video. You for sure gotta watch it, okay? So I'm gonna check it after we get through this, okay? So you need to know, what is your pre-trading routine? Another thing that's very important is, what sessions are you trading? Are you trading the London session? Are you trading the New York session? Are you trading the Asian session? See, these things are important so you can schedule your day. Man, so many people say, oh my God, I'm getting overwhelmed. You know, I don't understand how to balance my life and trading, and I'm trying to build the business, you know? Does that sound familiar? Does it sound familiar to anybody? Okay? You feel like you can't handle it all. But if you become more structured in your schedule, I promise it's going to make sense. You're going to be able to do this. You have to understand, what session are you trading? If you're trading the London session, then you're up 3 in the morning, 4 in the morning. You get your bag and you going about your business. You get your bag, you're not on the charts all day, right? If you're going to trade in a London session, guess what you can do? You can catch you an hour worth of go live, and then you can go right into the charts. All right. So you need to understand, what session are you trading in? And then that's the session that you're trading in. So the rest of the day, you're good. So if you work a 9 to 5, then you need to be trading the London session or trading the Asian session at night. This is very important. If you have a set session that you're trading in, then you're not trying to trade all day. If you don't have any structure, if you don't have a session that you're trading in, you're going to be stressed out trying to trade all day, feeling like you can't handle your life. And that's not what trading is supposed to do. Trading is supposed to free you. All right. So when it comes to the sessions, another reason why it's so important to understand what session you're trading in, so you can also understand what pairs to look at. So right here, you see what pairs that coincide with that session. So if you're trading London session, you're looking at pairs with GBP in it, right? The Great Britain pound. The idea is that you want to look at pairs where the banks are open in that country, right? So if it's the London session, guess what? In that time, the Great Britain pound, the banks are open. In Paris, the banks are open. In England, the banks are open. In London, London, same thing. But London, the banks are open. So you want to trade when the banks are open, because that's when the money is moving. Okay? So in the London session, you're trading GBP, Euro, AUD. All right? Then the New York session, you're trading stuff like CAD, the Canadian dollar. Why? The banks are open. USD, the banks are open. And guess what? You can still trade Euro and AUD, because when it comes to trading as well, you want to trade when these sessions are overlapped. All right, you want to trade when the sessions are overlapped. So that, matter of fact, I believe Shy dropped, hold on, let me look for it real quick. I believe Shy dropped in the sessions inside of the chat. So let me pull it up real quick. 1 second. Let me see his Telegram pulled up. You want to trade when the sessions are overlapping. Why is that? Because that is when it's a lot of volatility when the trades are overlapping. All right. So let me share my screen as I look for it so you guys can see it. See, also another thing, guys, if you go over here inside the group, you go to the right and you go to like the photos and stuff, man, when you look at it on your phone, all you're going to see is photos. When you look on the computer, it's going to show everything. But if you look on your phone, all you're going to see is photos. Hold on, let me see. Where is it? I wish it looked how it looked on your phone because it'd be easier for me to catch it. Shy, if you're on a call, or KB, if you could tell Shy to drop that picture in the chat right now real quick. Oh, there it is right there. Never mind. Boom. Boom. Here we go. Here are the 4 main Forex sessions. You learned this inside of the academy. So you want to trade when the sessions are overlapping. So between the London and New York, well, if you have time, if you're just going to trade all London, it's all good. But if you can help it and you can trade when the sessions are overlapping, that's amazing. So what do I mean by overlapping? Meaning you're trading between 8 and 12. So that's when the London session is lit and the New York session is lit. All right. So if you don't have this, you want to go to the Culture Investment Group chat. You want to go to the photos and you want to screenshot this or save this to your phone. Okay. So let me get back to it. All right. Perfect. So boom, New York session, CAD, USD, Euro, AUD, the Asian session, JPY, you can still trade AUD in there. All right. So these are your sessions. You have to decide what sessions am I going to trade? When am I going to be on the charts? What time am I going to focus? Right? You got to know this stuff. It's very important. Now, what times do you like to trade in those sessions? I kind of just touched on the times. You got to have your time set, right? Whether it's going to be 4 a.m. to 6 a.m., right? Or it's going to be 3 a.m. to 5 a.m. Or you only doing an hour, whatever it is, you have to make time. Guys, you are sacrificing sleep right now so you can live the life that you choose to live. It's not fun if you don't be successful, but you have to put the work in order for you to be successful. So in order for you to have success, you got to start disciplining yourself right now. So what times do you like to trade in those sessions? All right. Another thing you need to know as a trader, what is your criteria? What is your confirmations before you get in the trade? If you don't have any criteria, if you don't have any confirmations, guess what? You're just going to be trading. You might lose, you might win, but there's no confirmations. You're not learning. So what are some confirmations, right? Well, I'll get into that after this slide. So let's keep talking. What are some other things you need to know as a trader or as a Forex trader? Not binary options. We're not talking about that right now. As a regular MT4 Forex trader, you need to know how many pips do you want per trade. This is important because it doesn't matter what trade is being sent. If you know how many pips you need per trade, you say that's 30 pips. You want 30 pips per trade no matter what. Or you want 20 pips per trade no matter what. Or you want 10 pips per trade no matter what. Some trades you're not even going to pay attention to if you can't get the amount of trades that you need. For example, say if you're marking up, right? And you see that the next support or the next resistance after your entry is 10 pips. If you want 20 pips per trade, you're not going to take that trade because that trade is only guaranteeing you 10 pips. So you need to know how many pips do you want per trade. Another thing that nobody thinks about, you need to know how many pips do you want per week. So if you want 30, let's say you want 30 pips a day. So you want 150 pips a week. And let's say like today, it was 100 pips sent on one trade in a double R signal chat. SPX went for 100 pips. So say, for example, you just want 150 pips for the week. That's all you want. And you called 100 pips on a Tuesday. Guess what? You only need 50 more pips and you don't even have to trade for the rest of the week. So this stuff is important and it's hardly talked about. That's why I'm talking about it. You need to understand how many pips you want per trade. How many pips do you want per week? All right. Another thing that you need to understand is what percentage are you going to risk per trade? Is it 1%? Is it 2%? Is it 3%? I do not recommend more than 3%. So what percent are you going to risk per trade? Because after you hit that percentage, guess what? You got to close that trade if it hasn't hit your stop loss. Or your stop loss should be right at that percentage. What percentage are you going to risk per day, per week? Because if you hit that percentage in a day, you got to walk away from the charts. You got to walk away. You can't take any more signals. You can't place any more trades because you've already hit your risk for the day. Now, if you hit your risk on one day, that the risk that you put out for a whole week, you can't trade for the rest of the week. And you got to wait till the following week. It is what it is. Don't over leverage because we're going to take L's sometimes. I don't take them as losses. I take them as lessons because you got to learn something from each loss. If you don't learn something, it's a loss. All right. So you have to understand what percentage are you going to risk per week. So if you hit 15% today, you can't trade for the rest of the week. You got to wait till next week. This is important. This comes into discipline. If you are not disciplined, you will not be a successful trader, period. This ain't no kind of talk. This is real talk. All right. If you are not disciplined, it's going to be hard for you to be successful. All right. Another one, how will you manage your trade once you're in? Once you get into the trade, how are you going to manage it? Are you going to look at it from call levels? Are you going to mark it from call levels? All right. Are you going to place certain numbers in call levels so it can tell you when it hits your TP or, when it got 10 pips so you can move your stop loss? Trading View. Are you going to manage it from Trading View? Have you downloaded the Trading View app? Can you look at your markups from Trading View? Are you paying attention to your trade? I'm not saying you got to babysit your trade, but if you got in a trade on the hour chart, then on every hour, you can look at your trade. All right. You can see what it is that's going on in the charts. All right. What is your exit strategy? How are you going to exit? Say, for example, price hasn't hit your stop loss, but it forms a pattern that you notice that indicates it's going the other way. Are you going to get out the trade? What's your exit strategy? What if you forgot to put your stop loss and the trade already surpassed 30 pips in the negative? How are you going to exit? What is your strategy on getting out the trade? All right. How much trading are you going to do per day, per week, per month? This is stuff that's important and we don't talk about it enough. Are you going to trade 3 days a week? Are you going to trade Tuesday, Wednesday, Thursday? Are you going to trade Monday through Friday? Are you going to trade Tuesday and Thursday? Are you going to trade Monday, Wednesday, Friday? Are you not going to trade on Mondays and Fridays? What is it? You got to know this stuff. What is it? You got to treat this thing like a business so it can pay you like a business. You got to be structured. You got to be organized. What currency pairs will you or will you not trade? Something else that's very important. Like for me, I do not like NZD pairs. The only one that I might still trade is NZD CAD. But the rest of the NZD pairs, I'm not a fan at all. Why is that? I've had bad experience with NZD. That's me. That's not you. That's me. So even today, I think Davion put out a signal GBP NZD. Guess what? I did not trade that pair. Why? I don't like NZD pairs, period. I don't care what the market structure is. I don't care what the market says. I don't care. I stay away from NZD pairs. What pairs will you trade? Me, I love Euro AUD, Euro USD, right? GBP I like those pairs. So you got to have pairs that you trade, that you know that you will trade and you will not trade. How do you know what you will not trade? By keeping up with your trades. By seeing, okay, me and this pair won't get along. I ain't messing with that. All right, this is important. What time will you not trade? See, for me, before we started virtual school, I traded New York session. That was my time to trade. That was my time to get on the charts. I was an active trader. Sometimes I didn't use a stop loss because I was on the chart. So I saw what the pair was doing. I saw what the market was doing. I was an active trader. Now we're in virtual school. I got 3 children that's at home full time now. I can't trade during the New York session anymore. Why is that? Because I got to be a teacher. So guess what? I got to get up earlier. Now I got to trade in the London session. I cannot, if I'm not, maybe if I take a signal, I can take a signal during the day, but me being on the charts, I cannot trade while my kids are in school, period. I can't do it because I can't focus. So you got to have, what time will you not trade? If you're not focused at night, if you know it's a lot of stuff going on in your household at night, you cannot trade in that time. You can't. So you have to know what time will you not trade, and you got to be disciplined. How many trades will you have open at one time? Man, it was lit today. It was trades coming from the CIG signals chat, from the double R signals chat. It was trades coming from the harmonic scanner, swipe trades. It was gold cup. It was trades coming from everywhere. You cannot take every trade. You can't. If you take every trade, you might say, well, I was practicing I was about to say personal self-development. I was practicing proper risk management, but you were practicing proper risk management in 10 trades. Those lot sizes add up. You cannot do that. So how many trades will you have open at one time? Is it 3? After you have 3 trades, you cannot get into any more trades, period. All right? What will you do for personal development? This is important. Trading is mental. If you get mad when you lose a trade, you're not doing enough personal self-development. If you get pissed off, you're not doing enough personal self-development. Trading is all emotional. The skill is simple. Either you got it right or you got it wrong, period. Either you saw the pattern or you didn't. It's no gray area. It's straight to the point. So you have to make sure you have a personal development regimen. That's important. I cannot stress that enough. If you're getting upset because you're losing trades, it means you're not doing enough personal self-development. What's the book that I told you guys to read? I actually found an audio. I'm going to drop it in the chat for anybody who has not got the audio. What's the book I told you guys to read? Drop it in the chat. Come on, my 30 for 30 students. All right, there we go. Trading in the Zone. Yes, Trading in the Zone. You need to read that book, and it's going to help your mindset as a trader. And I actually just got an audio for it. So just in case some people who like to listen to the audio, I'll drop it in the chat tonight. Okay? How will you keep track of your trades? You need a journal. This is important. You need a journal. All right? You got to keep track to know what trades are you taking. All right? Now, what should be in your journal? Let's get into it. The first page is your why. All right? Second page, your affirmations. Say your affirmations. I know we say our affirmations on Mindshift, so maybe you need to pull out your journal so you can read those affirmations. So once you're done, you can hop on the charts. Or if you trade during the London session, what is your affirmations before you get in a trade? I'm telling you, you got to get in the zone when it comes to trading. You got to get in the zone. Third page is your confirmation checklist. If you don't have a confirmation checklist, you just trading. You ain't even trading, you gambling. Because you don't have anything to say why you're getting into that trade. You must have a confirmation checklist. Now, each time you take a trade, the following should be written down in your journal. What pair are you trading? Where did the trade come from? The trade origin. What confirmations did you see? Why did you get into that trade? Now, let's say, for example, the trade was a swipe trade or it was a signal. Then guess what? You're going to press plus, blah, blah. You're going to write swipe trade, and then you're going to write the person's name who sent you the trade. If it was a signal, you write double R signal check, the person who sent you the trade. Or whatever you got the signal from, right? Where you got it from and the person who sent it. Now, if you're just taking signals, you can't write down confirmations. All right. But if it's your trade or if it's coming from the harmonic scanner or Gold Cup or something, you know, and when I say Gold Cup, I mean like price trap on Gold Cup. If it's doing that, then you got to write down what are the confirmations? Why did you get into that trade? You also want to write your entry price, the take profit price. How many pips are you looking to get? Your stop loss price. How many pips are you risking? Here's an example. So let's say I got a trade off the harmonic standard. Guess what I'm gonna do? I'm gonna write my currency pair, where I got it from. All right. What was the alert? It was a sale. Price was at resistance. I confirmed the downtrend. Price was at a Monday high. Rejection at resistance. Whatever you saw, write it down. What was your entry price? Boom, that's what it was. TP, this is what it was. SL, this is what it was. And then once the day goes on, whether you win it or if you lose it, you put an X by it. If you win it, you put a check by it. Guess what you do? At the end, during the weekend, you have to have time when you go back and check your trades. You have to have a time when you go back and look at your losing trade so you can figure out why did you lose. It's only a loss when you didn't learn from it. If you learn from it, it's a lesson. If you didn't learn from it, it's a loss. So go back and check your trades that you put an X on. All right. Now let's keep going. Let's talk about the confirmation checklist. We're going to get on the charts. Don't worry, but I'm going to get through this. All right. And I'm going to drop this PowerPoint inside of the chat again because I just added some more stuff to it today. Confirmation checklist. What is the trend? The trend is your friend. What is the trend? All right. You can look at higher time frames for the trend. Draw your trend lines on the daily and the hour. You want to color coordinate your trend lines. So maybe for me, my trend lines for the daily are blue. For the 4 hour, it's pink. So I know if I see it on the hour, I know what trend line that is. All right. Did you check support? Did you mark up your support, your resistance, your zones? This is in no order, but technically how it would go, you would mark up your support and resistance. Then when you get to the daily and 4 hour, you're going to put your trend lines. You go down to the hour, you're going to continue to go with your support, resistance, and zones. You're trying to see where price has been. How many times has price been in a certain area? We'll get on the chart so I can make it make sense, okay? Questions you want to ask yourself. Is price near support? Is price near resistance? What are the wicks trying to tell me? What is the way that it doesn't want to go? What is it? Where is price rejecting at? Is it consolidation? If it's consolidation, how do we trade consolidation? We box it up, we wait for the breakout. Breakout, retest trade. All right. Check for the breakout, retest trade. Check for your Monday highs and lows. Check for your patterns, head and shoulders, morning and evening star doji patterns, doji rejections. This is all the stuff you need to be paying attention to. This is important. So now let's talk Forex patterns. If you get some value from it so far, drop a 1 in the chat. If you getting value so far, drop a 1 in the chat. I know my Project 30 for 30 students, y'all saw that already, but I know we got some people on here that haven't seen it before. Let's get it. All right, let's keep on going then. Let's keep on going then. All right, let's talk patterns, all right? The first pattern we're about to talk about is the M's and W's, all right? The M's push the market down. The W's push the market up. Again, we're going to get on the charts. That's why I want to get through this slideshow. And the next, I might be able to get through it before 7, but I want to be on the charts by 7. All right? So these are the M's and W's. When it comes to a simple M, a regular M, all right, you're going to see the market push up, go down a little bit. It's literally going to look like this, guys. And what is your entry? Either you can catch the rejection off of resistance, and you want to, again, you want to see this at a resistance area. All right, you want to see your M's at a resistance area. If it's in the middle of the chart, it don't count. You want to see it at resistance. All right. Hold on, go back. All right, so you can get your entry at the top of the M, or you can wait for the breakout. You can do a sell stop, or you can wait for a retest. It's up to you. Some people like stops, some people like retests. All right, so these are your entries for the M, right here or right here. All right, now sometimes you might see an M looking crazy. It don't look crazy. It's called an extended M. Don't worry, you're gonna get this whole PowerPoint. Okay, so where's your entries? Again, at the right part of the M, or wait for the breakout. Same thing here. If you would see an M looking like this, your entry at the breakout. So you want to get it high like this, or catch the breakout. You can wait for the breakout retest trade, or you can catch sell stop. Now the thing about stops is that you're going to go negative. People like buy limits because it gets, or sell limits because it gets either the highest or the lowest price. All right, so that's an M. Don't worry, we're gonna find M's on the chart. Don't trip, okay? Your W's, this is the basic W, a regular looking W, okay? Guess where your entry is? Your buy limit can be at the last W, right? At the last part of the beginning of the W. Your buy limit can be here, or you can wait for a price to break out. Two ways you can trade. You can wait for price to break out, retest, and then take the trade, or you can put a buy limit right here at the neckline. It's up to you. It's your preference. This is how it looks. All right. Same here. This is still a W, even though it looks crazy. It's still a W. It's still a W. All right. And I'm going to show you what it looks like on a chart. Let's talk about head and shoulders. Head and shoulders is when you see price go up, make the left shoulder come down. It goes up again, make the head, when it makes the head, it's going to form higher than the left shoulder. Then it's going to come down and stop at around the same area. Sometimes it might not be perfect. Sometimes it will. All right. The right shoulder is usually going to come in the same length as the left shoulder. Sometimes it looks a little funny. Sometimes it's perfect. All right. Where's your entry? Well, you can enter here with a knot, and that's just basically, I got you, Sharon. You can trade it here, right here, and that's basically the resistance at the last left shoulder. You can place you a sell limit here, or you can wait for price to break out the neckline, pull back, and catch the entry here. This is the conservative trade right here. This is risky. Why is it risky? Because price can, if it's a failed head and shoulders, price will continue to go up right here. So this is your risky entry on the head and shoulders. All right. But if price breaks that neckline, this is your conservative trade. All right. That's your conservative trade. All right. Sharon, go ahead with your question.
This is where
So let's talk about the inverted head and shoulders. When it comes to the regular head and shoulders, you want to look for that at resistance. When it comes to the inverted head and shoulders, you want to look for that at support. All these patterns only matter when it's at support or resistance. That's the only time these patterns matter. If it's in the middle of your chart, it's invalid. Even the W and the M. If the M is not at a resistance area, it doesn't count. If the W is not at a support, it doesn't count. If it's in the middle of your chart, it does not count. All right. So the inverted head and shoulders, it's just upside down. All right. Left shoulder, head. The head is always going to be lower than the left shoulder. The right shoulder is going to be somewhat equal. It might be a little off sometimes. I've seen some funny looking head and shoulders, but it's still a head and shoulder. Okay, this is why, y'all, I cannot stress enough. This is, I was about to release some information. We ain't even put that information out yet. I'm gonna hold that. All right, so let's go back to it. I'm about to let out some news, y'all. I got excited. All right, so with the inverted head and shoulders, right? You can literally draw a line at the neckline. Right, Sharon? You draw a line at the neckline here, right? And you can catch, two ways you can trade the inverted head and shoulders. You can catch the buy here, or you can wait. This is your risky buy. This is your conservative buy. This is your conservative buy, okay? So once price breaks above the neckline, which is here, you wait for the retest and you take the trade. Now, where is your take profit? Here. If you look left, you gotta always look left to see where's the next resistance. That's your take profit. All right, that's inverted head and shoulders. Now, let's keep going. Let's talk candlestick patterns. And I got to speed it up because I want to be on the charts by 7. All right, let's talk candlestick patterns. These are engulfing candles. These only work when it's at support or resistance. If it's in the middle of the chart, it's invalid. It's regular candles. You're not paying attention to them. So this is, and first of all, engulfing candles simply mean the left candle can fit solely inside of the right candle. That's what engulfing means. The left candle, and it has to be the opposite candle. All right. So if me and my son was to stand side by side, who is the engulfing candle? Who's engulfing who? Let me know in the chat. If me and my 3-year-old son is standing side by side, who is engulfing who? Yes, I am engulfing my son. Yes, I'm the engulfing candle. It's me. All right. So here we go. So right here, you see this is a bullish engulfing candle. Why is that? Because the left candle can fit totally inside of the right candle, and it's opposite candles. So the bearish candle can fit all the way inside of the right candle. This is called bullish engulfing. Same thing here. This is the bearish engulfing. You want to see these at support. If it's not at support, it's invalid. All right. Here goes your bearish engulfing. It's when you have a bullish candle that can fit totally inside of your bullish candle. Yes, body only. Thank you, Sharon. Body only. All right, the body can fit inside of the opposite candle. This is engulfing candles. All right, now how do you trade engulfing candles? Let's talk about it. All right, so right here, here's an example of a bearish engulfing candle. Now, how do you trade? You can put your line, and you can put like a little line at the bottom of your support. It's two ways you can trade engulfing candles, all right? Sometimes price will come and retest the middle, all right? Or this is your risky trade. All right, now if you want to just wait, actually, this is your conservative, this is your risky, okay? So because price can come back up here to retest here. This is the conservative trade. However, this is also the trade that you might miss because price doesn't come all the way back up here. I'm going to give you some examples when we get to the chart. All right, but however, you can place your line at the bottom of the bearish candle. Once you do that, this is where you can enter. You can market execute, you can buy stop, or you can put you a sale limit here. It's up to you. All right, this is a bearish candle. You want to see your bearish candles at a level of resistance. All right, boom, look at this. Can anybody tell, we're about to talk about this candle, but can anybody tell me what type of pattern that is?
A morning star.
Almost. Who else?
Evening star.
Correct.
Evening star.
Correct. And we're going to talk about those in a second. All right, so what's your entry? All right, here if you place your sale limit right here, guess what's coming back to get your entry? This evening star is coming back to get your entry. Okay, where's your take profit? Right here. Can somebody tell me why this is your take profit? Unmute yourself.
Common area.
So it is the last area of support. So you want to, if your entry is here, this is your entry, you want to look, let me look left and see where's the last level of my support, right? This is your take profit 1. And then if you want to keep going, if you got 2 entries or you want more pips, guess what? If you don't want to go with this area, then what you're looking for is the next area of support, which is here. That's your take profit 2. All right. Engulfing candle, place your line at the bottom of that engulfing candle. That's where you place your sell limit. Wait for price to come get your sell limit, period. Boom, you in a trade. All right. And go ahead, Sharon.
I'm sorry, I was that question. So I know where you got the take profit level. I see that's an obvious level of support. But I know when we're typically looking at 2 different candles together, it's support when it's 2 of them. So are we skipping past the first level of support just because it's way more at the second? Like you see where it's a green and red candle. Like
you talking about right here?
Yeah.
Well, our entry is right here. So these pips right here,
it wouldn't be enough.
It's not enough. Right. So I'm looking at more where it's a bigger rejection area.
Okay.
Right? Where it's more candles rejecting that area. So that's why this is my take profit level.
Okay. Thank you.
Right. Perfect. No problem. All right. Bullish engulfings. How do you trade it? Same thing. This is your bullish candle. You can place your line at the top. Wait for price to come back to get your entry. Price would have came here and got it, here and got it, or here and got it, depending on how quickly you place your buy limit. So engulfing candle, place your line at the top. Wait for price to come get your buy limit. Place your stop loss at the bottom of the candles, the bottom of the pattern. All right, this should be about 30 pips. Where's your take profit? At the next level of support. Next level of resistance. All right, let's keep going because it's now it's about to be 7. Morning and evening star patterns. This is what it looks like. A morning star. When you think about a morning star pattern, think about good morning, sun coming up. All right, the sun comes up in the morning. So for morning star patterns, you're looking for a price to go up. It only works when it's at support. If it's at the middle of the chart, it does not count. It doesn't count at the middle of the chart. All right, evening star. The sun is going down. Price is going down. All right, it only works when price is at resistance. It does not count if price is not at resistance. All right, how does it look? Bearish, but in this candle, it don't matter what it is. This don't matter what it is. It can be bullish or bearish. All right, but this has to be bearish. It doesn't matter. It just needs to be a doji, and this needs to be bullish. All right. Same thing here. Bullish, bearish, bullish, doji, bearish. Again, it doesn't matter if this is bullish or bearish. It just needs to be a doji. All right. Bullish, doji, bearish. All right. I didn't know we were going longer than that. Okay, no problem, Destiny. All right. So how do we trade morning star patterns? Here goes your morning star. All right. Bearish, doji, bullish. You place your line. This is the neckline right here. This is the neckline. Okay. You place your buy limit here. Price came to get your entry here. How do you know if it's a true morning star? Because the next candle is going to be above. The fourth candle is going to be above this candle right here. So the fourth candle is going to be above the third candle. That's how you know this is a confirmed morning star. Once that happens, you place your line, you place your buy limit here. This is where your buy limit is. All right, guess what? Price came to get your buy limit here. Your stop loss is below the pattern. You're taking off. Where's your target? The last level of resistance. Drop a 2 in the chat if I'm making sense so far. If I'm making it make sense, drop a 2 in the chat. All right, perfect. Perfect. Let's keep going. How do you trade evening stars? The same way. The same way. You're putting your line. Now I'm going to tell you, you are again right here. That fourth candle, it needs to break below. If it doesn't come below, before your entry is confirmed, you need a candle to close below the third candle. This candle did not close below. This candle did not close below. This candle did not close below, but this candle did. Now we're in the money. Now we're in the money. So guess what you do? Place your line. Here's your entry. This is your entry. Where's your target? The last area of support or resistance. This is your area. That's your target. This is your target. All right. Let's keep going. We're not going to get in crypto. We don't have time. I want to get on the charts. Okay. Y'all missed the crypto session last week. I want to get on the charts. All right. Let me pull up the charts. All right. Let me share my screen. All right, here we go. Boom. So we're gonna look for the patterns. All right. So let me write down all the patterns real quick that we just went over so we can go look at all of them. We went over M's, W's. We went over engulfing, and we went over the star doji. All right, cool. All right, so here is actually the trade that I sent out today. It's still negative right now. That's all good because I trust my analysis. This is actually the trade that I sent out. Why did I send it out? Because it came back to retest this level here. All right, so it came back and retested this Monday high. We in the trade. Well, I'm in the trade right now. I don't know who took the signal. All right, so let's go look at some pairs. Let's go look at some entries. Okay, so here, boom. Hold on one second. All right, so here, right here is an example of the funny looking M. This is an example of the funny looking M that we looked at today. All right, I think it was called a short form M. That's the correct name for it. All right, this is an example of the funny looking M. All right, guess what you can do? Place your line. This is the neckline right here. Boom. Oh, I thought I had a line. Here we go. Place your neckline. This is the neckline right here. This is the M. You place your line at the neckline. Guess what? You got into the trade here. This is your entry here, right? Or this might have been your entry here. Let's say, depending on when you place your trade, this could have been the entry here and you went in a little negative. That's okay, right? But if you waited here, here goes your neckline here. Price came and got your entry here and you hit take profit. And you hit take profit, all right? This is an example of the funny looking M. All right, I'm just gonna call it the funny looking M. All right, look at this. This is also an evening star up here. This is also an evening star pattern right there. Y'all see that?
Yeah.
Shanique like, yeah, I see.
Yeah, I see.
Yeah, I see it's right there. It's clear, right? So here it is right here. So guess what you did? Boom. You put your line here. Boom. Boom. There goes your line. Guess what? It came to get your entry here. Boom. Came and got your entry. You're in the trade. You're in the trade. See it? That's why it's important to know these patterns. All right, let's go look for some more. So we've looked at the funny looking M. We've looked at an evening star. Let's go look at some more. This is an ugly head and inverted head and shoulders, but it's a head and shoulders. Let me show you. I'll see if I can find a prettier one. This is ugly, but it's a head and shoulders though. Let me draw it up for you so you can see it. Where is it? It's a real ugly one. I can't even draw it good. It's so ugly. Here it is right here. Boom, boom. Draw a line at the neckline. Entry here. You in the trade. You in the trade. Boom, there. That's an ugly one. I'm trying to find a prettier one because that's ugly. But it is a head. It is an evening star. All right. Right here, I know we talked about, matter of fact, I know as another session, we went over engulfing candles and morning star patterns and everything before as well. Here goes engulfing candle, bearish engulfing. All right. bearish engulfing, put your line at the top, wait for it to come back to get your entry. Did it get your entry? Yes, it did. Yes, it did. All right, let's look at some more stuff. Let's see if I can find here goes a huge W. This W is so big. There goes a W pattern. Remember, I told you that your entry can be, you can take the trade at the breakout, or you can try to take the right leg of the W. Let's go look at some more stuff. Let's see if I can find a head and shoulders. Here goes a head and shoulders right here. Boom. Place your line at the neckline. Boom. Here goes your entry. See how many pips you caught before it pulled back. 50 pips. Let's get it. Catching at the neckline. Catch it here at the right shoulder. Your entry can be here, or your entry is at the neckline. Remember, I told you sometimes it looks a little funny, but that, truth behold, that's the left shoulder. The head is higher than the left shoulder. The right shoulder is almost equal to the left. See, once you can identify, it's game over. This is on one pair. Let's keep looking. There go another inverted head and shoulders. It's ugly. I wish that we can find some clear ones, because that one another ugly inverted head and shoulders, but it's a head and shoulder though. Here goes a head and shoulders here. Place your entry at the neckline. And this is if you're not already in a trade, just by seeing this up here. If you're not already in a trade, just by catching the sale off of the rejecting resistance multiple times. Sharon, is that an old question or a new question? I see your hand up. All right, that might be an old question. All right, head and shoulders. If you're not already in the trade because of how price has rejected these areas right here, guess what? Place your line at the neckline, catch the entry, catch the neckline, trade, boom, trade, boom, multiple times. Let's keep going. All right, wait. So we saw an M already. Did we see a W? Hold on, let's find a W. I want to find a clear W. Here goes a W right here. Oh, we did find a W. We did already see a W. Here's another W right at support. Boom, boom, boom. So y'all can see it. Here's the neckline right here. Boom. Catch the trade right here. Take off. Pips. 70. Off trading the neckline of a W. Is it at resist? Is it at a support level? Yes, it is. All right. So we saw M's, W's, we saw engulfing, and we saw even SAR. We actually just looked at all of them. Does anybody have any questions? Any questions? If not, we're about to go ahead and transition to the harmonic scanner. Let me know if y'all got any questions. All right, no questions so far. All right, so we're gonna go ahead and transition to our harmonic scanner training because we gotta launch at 8 o'clock on this link. So I'm gonna go ahead and get it all in. Y'all good so far? We good? Y'all need to stretch a little bit. Do some jumping jacks. Everybody good? All right, we good. All right, let's jump into this scanner now, okay? This scanner can be used as multiple ways, all right? The scanner can be used as a confirmation. The scanner can be used as just you trading, all right? So you can do all your markups on a chart, and then after you do all your markups, you figure out what you want to trade, what's your next move. Guess what? Go check the scanner. The scanner can be a confirmation to the move that's about to happen. All right. Or you can simply just use the scanner as going to find your trades. Okay. Now, right here off top, I can see that first with the scanner, whose first time is it on one of my harmonic scanner trainings? I need to see how slow I need to go. And I'm actually going to stop this recording now. It's already super long. So I'm actually going to stop this recording now because I've already recorded a training for the harmonic scanner.